Okay, this is Strand 7, Standard 2, and actually in our last lecture we talked about this just a little bit. Your business, product, or services are probably regulated by some government entity which require you to apply for licenses and permits. A lot of times if you're handling a product that can be dangerous or hazardous to the consumer, and it's known for that, then you have to have some kind of a level of competency and prove it to the government that you're not going to harm the people. So a food handling permit is necessary when you're dealing with consumable foods that are ingested. And there's other licenses and things like that related to chemicals, let's say manufacturing of firearms. There's various things that are related to what kind of things could go out to the public and could create harm. There's also other things that are related to whether you're competing fairly. Are you competing fairly in a market of software, or maybe there's some agreements that are made with foreign countries. There's so many things, and it's boring to talk about in my opinion, that I'm just going to say you have to look it up. And I say that there, number 2, indicate licenses or permits your business requires. List them below the links. So I've given you a ton of links. Obviously on paper they're no good to you, but you can click on them when you go online on Canvas, which is probably where you are right now. Oh, of course, you know, there's also copyright issues. So there's patent issues and copyright issues. We go back to the singer. The singer's producing an album of all covers. Well, with those covers, you actually do pay for the copyright holder. You give them a royalty. So you have to basically have permission from copyright owners for various things, including written works. It could be someone's image, it could be their photograph, whatever. You have to pay for that copyrighted image or work. And I call that sort of the same thing as a license or a permit. So if you have to pay some copyright owner, also list that down. All right, this is everyone's favorite subject. A cost that businesses pay to federal and local governments. Taxes. You didn't have a hard time guessing what that one was. What taxes do small businesses pay? And again, I've got a ton of links here, only valuable to you if you really are researching your product and service and how you're going to pay taxes, and if you're online on Canvas, so you can click on the links. But I do require you to think about it and list something that is obvious. And one of the obvious things is sales tax. Right now in the state of Utah, it's 6.75%, I believe. It fluctuates between 6.25% and 6.75%. So, and you might even just want to round it up to 7%. If you're being really fine-tuned on it, great, but 7% might be a good way to look at it. So here it says, when you think of business taxes, you think of the federal and state business income tax rate. So in addition to whatever sales tax, there's also the federal and state business income tax rate. There's a lot of ways that the government gets you, quite honestly. There's depreciation, there's employees, there's a lot of things the business taxes a little bit. And I'm going to go off on this a little bit, my 2 cents. The businesses should have a right to survive and thrive without the government taxing them or regulating them to death. But, you know, there's got to be a fine line there. So, President Donald Trump, being a businessman, he came in and started cutting regulations all over the place. And then where the balance starts shifting is people that are, for example, really trying to protect the environment. They're saying, now wait a minute, you're taking away a lot of these regulations and probably taxes or whatever that help support the environment. For example, global warming, or for example, having a pipeline run through a forest area, or those kinds of things. And so they get upset and they hope that a new president gets in, and at the recording of this, we're having an election in a couple months, so we'll see. But anyway, so they hope a new president comes in and starts putting more taxes and regulations again on people that could be doing something that damages the environment. There's a lot of those kinds of trade-offs. It's also a way to keep the playing field fair. So let's say that in the computer wars, does Apple have an unfair advantage over Microsoft for some reason? Is there something going on with their intellectual properties or whatever? And by the way, those two were always in lawsuits back in the day anyway. So how much does the government have to regulate, what is fair and what is not fair in terms of selling their products? Or maybe it's the cola wars, we used to say, Pepsi or Coke. Which one do you guys like? And is there something that is unfair in the way Pepsi's trying to get more of the market share? So you have different kinds of regulations, and I'm not really talking about regulations at this point here, but the government will also sometimes kind of manipulate the way things work by the way they're taxed. Maybe a better example is the cigarette tax, the tobacco tax. So if the government is saying it's not healthy for our people to smoke cigarettes, then one way that they can discourage that, and the tobacco farmers hate this, is by charging a cigarette tax or a tobacco tax. And there's a fairly hefty tax on cigarettes. All right, so anyway, you got to figure out what your taxes are, and they come at you from many sides. I was going to finish my 2 cents. So to add 2 cents and make it 4 cents, not only do I feel that a business has a right to survive and thrive, it's really the lifeblood of our economy. So in some countries, they get it. And there was a time, at least in Japan, where there weren't really any employee tax. They wanted people to be employed. So they didn't tell the owner of the company that you've got to pay a tax for every employee that you have. Why would you do that if unemployment is high? If people want to work, but the owners don't want to pay the employment taxes. So Japan at one time practically cut out the employment tax. And so now if I'm an owner of a business, I can say, well, I can have more factory workers. My understanding is China, Korea, other places, Asian countries would do the same thing. There were even incentives to start a business. Because let's say that in Japan, so many people don't want to take the risk to be entrepreneurs. It's all about, I hope my son grows up to be a doctor or a teacher. I hope he works in a factory. I got a good factory job. That's all the goal, because to be an entrepreneur is too difficult. Well, then what you do is you give incentive to people to be entrepreneurs. You want to start up more Hondas and Suzukis and Toyota companies, because that's how the country makes money. That's how the whole economy works. So, in my opinion, you got to find that fine balance between how much you tax your citizens and your corporations and the purchases of products. How much do you tax to kind of keep like the government going, and in general the lifestyle? You got to have roads and bridges and everything, right? So how much do you tax versus how much do you take away the tax, incentivizing businesses to grow and flourish? The National Federation of Independent Business says most small businesses don't pay income tax at a business rate. About 75% of small businesses are not corporations. This large percentage of small businesses are pass-through entities paying tax at the personal tax rate of the owner. Honestly, it's fairly complicated to talk about. I'm not going to teach a class on taxes and how to avoid taxes. All right, it says in addition to income taxes, the largest tax bill small businesses pay is for payroll taxes. That's what I said. How much does the government charge you to have an employee? These taxes are based on employee pay at the rate of 7.25% on employee gross payroll. Other payroll taxes like unemployment taxes and workers' compensation taxes increase the amount of tax an employer must pay. I ran a restaurant with a couple of guys, and the way that we would keep the payroll tax down, I think this is fairly common, is we would only pay our waiters and waitresses, we used to call them servers, we'd only pay them about $3.25 an hour. But wait, Mr. Walker, that's not even minimum wage. You're breaking the law. So it was a kind of a fine line thing. We had to show they were making minimum wage, but we didn't pay them minimum wage. So can you figure out how did they get to minimum wage? That's right, with tips. But we're not paying the tips. So we're not paying a payroll tax of 7.25% on, let's say, $9 an hour. We're paying it on $3.25 an hour. But with their tips, frankly, they were easily making $15 an hour, okay? So that's just one of the little things you do. And you all try to figure out how to avoid paying more than your fair share of taxes when you're running a business. I used to say the government forces you to try to pay less taxes. When the government's really trying to get taxes, the more that they try to tax you, the more you have to try to figure out a strategy to avoid losing your business. Frankly, the final story of that restaurant was that we were paying so much taxes that we had to close our doors. So you can see where I stand on that, right? Other taxes your business will probably pay include capital gains taxes. That's when you sell something and you have money that you have to pay on. On business investments, it says, and the sale of business assets. Long-term capital gains held more than a year are taxed at different levels depending on the income of the business. Short-term capital gains are taxed as ordinary income. Businesses must pay property tax. Actually, let me go back to that for a second. So I told you I'm a serial entrepreneur. So my company, again, we make these plastic boxes. Someone comes along and says, I want to buy you out. I want to have your business. I say, you are welcome to it. I've had my fun, and we'll round it up to $1 million. You can buy my business for $1 million. So I sell my whole business to this guy for $1 million, and I walk away. However, I'm going to be taxed on that $1 million. That's that capital gains taxes. Businesses must pay property tax on real property, land, and buildings owned by the business. Just like your parents have a home, or if you happen to have a home, and you will someday, you pay a property tax. And that property tax is usually assessed by the county where you are, and it also involves the city. So you might pay a different property tax like in Beverly Hills than you will on like some very affordable apartment in Delta, which you're actually owning, I should say. So your business is the same way. You pay property taxes. And does it say here? I forgot to see. It says, yeah, land and buildings owned by the business. A lot of times we think of property as land. This is also the building, just like the home. Your business must also pay tax on dividends from business investments. So your business can invest in things. In fact, a lot of people don't know this, but colleges put a lot of the money that they receive into investments, basically into the stock market. And then the colleges are taxed differently because often as an educational institution, they don't have to pay as much. But if they do make a lot of money in the stock market, those are called dividends or other investments, they will pay taxes based on how much they made. And I don't know what it would be, but let's say it's even only 2%. So $100 that they earn off of the dividends for where their investments are, they pay $2. Maybe a normal corporation pays $4. Tax rates are something I couldn't care less about unless I'm in that business and I have to learn it. Okay, at the taping of this particular lecture, it suggested that there were some new tax reforms. There's always going to be tax reforms. Some of the tax reform law changes may affect your business depending on what state you do business in. States are considering the effects of the new tax law, and I've got you a link there. Some will be in line with federal tax provisions and some will not. All right, the next one says, how do small businesses pay taxes? Most small businesses are owned by individuals. As discussed above, partnerships, LLCs, and sole proprietor businesses pay no business tax. But the tax is passed through to the owners and is paid by the owners on their personal tax returns. So asking the question about how much tax they pay gets muddled up in the tax owed by the individual for all forms of income, not just the income of the business. The only type of business that pays taxes on its own is a corporation. The corporation's owners don't pay any tax on the corporation's profits, but they are taxed on their income if they work as employees, and they are taxed on dividend income they receive, the so-called double taxation issue. And again, not going to get into that. I will simply say this. If you have a corporation, an S Corp or a C Corp, it is looked at by the government as its own entity, as if it were a person, and that person pays taxes on their income. Determining how many sales you need to make in order to cover the cost of making your product is called the break-even point. This is a pretty simple thing that you can calculate. Every business absolutely must do this. You must think about this before you go into business. Let's say I'm making this rose and I'm selling it. I'm making it for $1, I'm selling it for $2, all right? And let's say that I manufacture 100 of them at a time. So, how much does it cost me to manufacture 100 roses? At $1 a piece, that's $100. And I sell them at $2, how many roses do I have to sell to get to $100? That was my cost, right? So I just spent $100 making these roses. How many do I have to sell at $2 before I break even? I have to sell 50. Okay, so if I sell 50 roses, and I made 100 actually, but if I sell 50 roses at $2, then I make $100. I have broken even on my cost. I've made 100 of them though, so I want to sell all 100. So if I sell another 50, that technically is where I make my profit. So you will say at some point in selling something, okay, we just broke even. And a lot of times they do it per day. Let's go back to the restaurant idea. Okay, at 8 p.m. at night, we broke even on the restaurant's expenditures. So you have your employees, you have your costs of your food costs, some other things including HVAC, heating, ventilation, air conditioning. And let's say that all of that costs you $500 at your restaurant. Well, once you have sold $500 in sales of the food on the menu items, then you say I broke even, and that's say at 8 p.m. at night. Therefore, you stay open till 10 p.m. The last 2 hours are where you actually make your profit, and you sell another $200 worth of food. So you had sales of $700 that day, broke even at $500, made $200 that day. And that's not too far off from the little restaurant that we started. Okay, now it says complete a break-even analysis for your product. Step 1, list all your fixed expenses and variable expenses for a month's business. Okay, so here is a chart that talks about fixed expenses and variable expenses. So fixed expenses are things that you just know you're going to have to pay every month. It doesn't vary very much. That's using the term vary twice but spelled differently. It doesn't vary very much. You know there are equipment payments that you are paying on, and they are fixed. Every month you're going to pay $500 on your equipment lease. There's a building lease. You know every month you're just like an apartment or a mortgage. Probably the cheapest apartment in America, probably the cheapest apartment in Spanish Fork would be about $700 a month. You know you're going to pay $700 a month for that one bedroom, one bathroom apartment, okay? In this case, it's the building and where you do your business. Salaries and insurance. I don't expect you guys to really know what your insurance is, but again, if you have a friend that is helping you sell, then you know how much you're paying him. If you put him on salary, then you're really running a very effective business for a teenager. And if you are paying salary, then you're paying his insurance. You're paying Fed and FICA and maybe into a 501k and all that kind of stuff. But we won't even begin to talk about that. So then you have a total. Put a total down there on what you know are your fixed expenses. And variable expenses are things that can change. Utilities really don't change that much, but they put them down there. So if utilities change, it's usually because there's more consumption of utilities as the business grows, or if it decreases. How many toilet flushes, based on how many employees you have, will cost you more money for water? Is that a funny one? Of course, are you only doing one shift from 8 to 5? Therefore, you only have to heat or air condition your working space for approximately 9 hours. But what if you have 2 shifts or 3 shifts? How often do you have to keep the lights on? So that's why they say utilities is variable. The cost of raw materials absolutely can be variable. We talked about that with gasoline. Sometimes oil prices go up, sometimes they go down. That could be a raw material in the making of gasoline. Do you have raw materials that you source for your product, for your manufacturing? Hourly labor employees, that's as opposed to salaried employees. So salary means that, let's say a teacher is making $40,000 a year. That'd be very typical for a beginning teacher in Utah. $40,000 a year on salary versus a substitute that just comes in and works kind of hourly. How often do you need hourly workers? Well, again, it depends. Supply and demand, right? So all of a sudden, for some reason, let's say it's Valentine's Day. There you go. So Valentine's Day comes along, and thank you for whoever supplied me with this. Valentine's Day comes along, and all of a sudden we have to cut and we have to grow, but now we have to cut and ship a whole bunch of roses. So I hire hourly workers to help with that. Get your total there, then you have your total sales, as we talked about. What's going to be the retail price of your product, and how many are you going to sell, and then you go against your costs and you say, okay, this will be my revenue. And I'm guessing most of you have not done this yet, but this is what you always do before you even begin to start a business. You look at what it's going to cost, and you often do this on a spreadsheet of some kind. And then you say, how much can I sell them for? What's my monthly profit going to be? What's my break-even point? And please, never go into a business on anything where your costs exceed your profits or your sales or your break-even point. That's the best way to say it. Never go into a business where it's going to be hard to get to the break-even point. You want to get to the break-even point easily, quickly, no risks. You're sure, you're 100% sure you'll hit your break-even point and then make a lot of money beyond that.